two sections. Namely, we have got the first section will be, I think maybe if you remember, you can adjust that, assets. In agreement?
Yes. Yes, sir.
Yes. That's the first one. And then immediately under assets, we need to have non-current assets. Okay. And then under the non-current assets, we will put some items there. But now let's check here. They want us to do the statement of financial position. They said the notes are not required. Okay. So in future they can say notes are required. Okay. So but for now I'm just gonna ignore the notes for now. We just have to focus on the okay.
Yes.
Yes. So the first thing that we are going to do under here, we are going to put what we call property, plant, and equipment. They usually call it PPE. Have you ever heard about it?
Yes, sir. Yes, sir. I label mine as PPE.
Yeah, PPE. So obviously this is the same as all the fixed assets that you have. Can you see now? So they combined everything together. So it means we need to find each and every proper item that is going to fall under property, plant, and equipment. Maybe before we continue, we can just have these notes quickly. Obviously, we have got equipment, we've got the vehicles, we've got land and buildings, we've got machinery. Can you see now? Those fixed assets. Sometimes we call them tangible assets. Very good?
Yes. Yes, sir.
Perfect. So that's the first thing. So we need to go and check them. Like I said, there's no order, but for me, I prefer to check them here before I come to the information. Are we together?
Yes, sir.
Yes, let's go and check them here. Do you see any one of those things that I mentioned? The fixed assets?
The vehicles at cost, sir?
Vehicle at cost. This is what? This is the one that we're looking for. So the cost is 281,000. Okay. So we're gonna show some calculations in brackets. Okay. You can either show it here. Let me see. And then we just put it as it is. So let me just change this so that it can be a different one. Can you see now? So this is I found the cost. And remember here, the values that we must put for property, plant, and equipment, it must be the carrying value and not the cost. Remember, the carrying value is after you have deducted any depreciations. So we must go and check if there's any depreciation for the year, of which I suspect we have. But we do have what we call the accumulated what? Can you see the accumulated depreciation here?
Yes, sir. Yes.
So we must also take this one and minus it in brackets.
Okay.
Yes. Because the asset is losing value. So we must cut it. Please talk to me if you're lost.
It makes sense. Like
makes sense.
Because it makes sense. Like the credit side, we minus it.
Yeah, we minus it.
Okay. Yes.
And then
so we say 281,000 minus 112,000.
Yeah, but so far we cannot close brackets. We need to check because we can find that we've got additional depreciation here. Did we have any depreciation here? Yes, this one. Can you see?
Yes, the 28,000 one. Yes, 2.3.4.
So you must also minus it because we want everything depreciation for that asset. Okay, you come here, you minus it. And then you will get your carrying value that you're going to put here. Are you with me?
Yes.
Yeah, you can use the calculator and check how much do we have.
I got 140,500, sir.
140,500.
500, yes.
Yes. So remember, in future you will find other fixed assets. So you're gonna add their costs and deduct their own accumulated. You can do all the calculations in brackets here. But if you don't want to do them in brackets here, you can have a space somewhere, but you will have to cross-reference them so that the marker can be able to go and check them. Let's say you say calculation number 1, and here you just have to write calculation number 1 in brackets. So the marker will go and check the calculations because they do mark those calculations. Are we together?
Yes, sir.
But it is up to you to show. But for me, if I can have enough space, I prefer to show everything here.
Yeah, just in case.
Just in case, yeah.
Yeah.
Okay. Now let's talk about the possibilities. In future, if I may ask, do you know of any other non-current asset that we can have? Because there's a possibility that we can have them. Before I tell you, no pressure though. It's okay. It's okay. I'll give it to
I'm
you.
not sure.
And I know
okay.
You'll never forget. You won't forget. I know.
Yeah.
So it's called financial assets.
Okay.
So the financial assets are like investments.
Okay.
In the form, let's say if you go to the bank and fix your money for a certain period, we call it a fixed deposit. That is what financial asset. Does that make sense?
Okay. Non-current, yes, sir.
Yes. And again, sometimes maybe you don't want to invest at this financial institution. What you do, you invest in shares. So those shares must come here. So here, it's either you invest in shares or you invest at the bank. So it's up to you if you want to invest. So if you have them, you're gonna put it here. Does that make sense?
Okay. Yes, sir.
Yes. Can you see they said we must not show the notes, ne?
Yes, sir. Just don't show notes.
So if they want you to show the note, you must go and show them the note for this property, plant, and equipment. And this financial asset is also a note, but that is something for the future. For now, we just focus on the requirements. Okay.
Okay.
Yes. Are you okay, guys? Can I proceed?
Yes, sir. Yes, sir.
Yes. The next one is going to be current assets. I think you know the difference between current assets and the non-current. Eh?
Yes, sir. Yes, sir.
Perfect. So now we go to the current assets, and the current assets. Firstly, we have to look. There's no order, by the way, but we normally start with what? Inventory. And again, by the time when we deal with the nodes, inventory will be one of the nodes. Okay, I'm just saying in advance, inventory.
Okay.
Yes. So now, let me just use the system. Yeah, now inventory. So again, I want you to write this thing down for future reference. For inventory, you must look for the following before we can go and look for it. You must go and look for inventory or trading inventory at the end of the year. Okay. Inventory at the end of the year. Okay. And then you must also go and check for any consumable stores on hand. Did you hear me?
So consumable stores, is that like what does that mean?
Stationery, let's say any stationery that is left on hand. So any stationery on hand, any packing material on hand, so any printing on hand, as long as you see any expense that is on hand, we call them consumables. So we use them in the office. So when we use, let's say, for example, stationery, the one that is left at the end of the period is an asset and only at the end of the period. But the one that we have used or bought is the expense. Are you with me?
Yes, sir.
Yes. So you must check if you, as long as I'm telling you, if you are not sure about it, or here on the information, they will tell you something like stationery on hand. As long as you see the word on hand, it will give you a hint. It means that will be called consumable stores on hand. And they must come and you must go and they are part of the inventory at the end of the day. Are we together? Yes.
Yes, sir.
Okay, no problem. If we check here, let's check the information first. I think there's a 2.1 where they talk about the inventory. Let's check first. They say the Alpine, which is us, we record trading inventory according to the perpetual. a sales return of damaged trading inventory to the value of 450 pertaining to a previous credit sales transaction was not recorded. The cost price of this inventory was how much? Was 300. Are we
Yes.
together?
Yes.
Yes, sir.
Yes, sir.
So they say it was not recorded. So
Okay.
remember, if you are using perpetual, it means the cost price, meaning the cost price of inventory. Are we together? So it
Yes, sir.
means
Yes, sir.
because they said so, they said was not recorded. So it means at the end of the day, we need to go and record it. Obviously, we did
Okay.
record it when we were with sales. Under sales, I think we
Yes,
did
sir.
show this one. You know?
We did. Yes, sir.
Yes, sir.
Yeah. But it means even our inventory, we still have to record how much?
The 300.
300.
Oh, I
300.
see.
Because the
Okay.
cost always go with what? Is the cost of the inventory.
Cost price.
So meaning
Okay.
that
Yes.
inventory there will have to decrease by how much? 300.
Yeah. Subtract 300.
Because let's no. Let's see who returned it. Are we returning it or someone is returning to us? I think the customers are returning back to us.
Back to us. Yes, sir.
So meaning our inventory is going to increase. Okay. So let me do this because we're getting the inventory back.
Oh, so it's going to increase, sir. Oh, it's
Yes.
like adding it back.
Remember, they
Okay.
did not. Yes, because they didn't tell us that after they've returned, we wrote it off. They didn't tell us that.
They didn't. Okay. Yes,
They
sir.
just said they returned. Okay. So what I'm
Okay.
gonna do here, I'm gonna just come here in brackets and put that balance first. I'm just gonna put the balance of 25,300, and I'm gonna add that 300. Are you still with me, guys?
Yes, sir.
Yes, sir. Sorry, on mine, I said I subtracted it instead of adding it. I'm not sure why.
No, remember, only if we were returning back to the supply, it means we're
Yes.
taking it out.
Okay, so
So it
now
was
it's coming
supposed to
back
increase
to us, so we're adding it.
to the business. Yes,
Okay.
that's
Okay. I
right.
see. That makes more sense.
No,
Okay.
yes. So it must be added like that. Okay. So we need to check if there's any other thing about the inventory, but to my experience, I don't think we had another one. So this was the only one
No,
that
sir.
we had to relate. Okay. So we can
Yes.
close there. So the total will be how much? 25,600.
Yes. Sir.
So something that I need you to okay, just to do it, and 25,000. So I want us to go back up there. Remember, here we only have this. So what we're supposed to do, we just have to box this. Remember, you can box this as a procedure. You can box this. Remember, I said maybe in the future you're having some other stuff. We box it like
Yes.
this.
Sir. Yes.
Let's say in blocks, and then on top here, you just have to say the total is just for marks because they do
Oh,
use
just
some okay, sorry.
okay.
Just for mark, not this one here, just for marks, and then you say the total is 140, 500 because now we only have.
Okay.
Can you see now? Because next
Yes.
time you can have more than two. Does that
Yeah,
make sense?
like yes, sir. Like if there is more than 2, then
Yes.
okay.
So if there are more than two, you're gonna add them together
Add
and
it.
find a
Okay.
different total. Yes.
Okay. Okay.
Just for marks.
Yes, sir.
And then the next thing that you're gonna put here, we're gonna deal with what we call trade and other receivables. And again, it's a note. So if you've got, you can write this note down.
Okay.
For you to find the trade and other receivables, you need the following. Firstly, you need debtors control.
Okay.
Okay.
So tax control.
Debtors control.
Okay. Yes, sir.
If you have got anyone who a debtor who paid during the period, you will obviously minus that payment. If it was not
Okay.
recorded, you're gonna
Yes.
minus any payment received from a debtor.
Okay.
If you have got any data that you wrote off and you did not
Yes.
record, you must also write amount written off.
Okay. So it's the tax control, the payment received from debtors, and then the ones written off.
Yeah, the amount written off,
Okay.
yes. And
Yes,
then
sir.
if you have got anything called provision for bad debts, nowadays
Okay.
they call it allowances for credit losses. You
Okay.
will minus it.
Minus it. Okay.
Minus allowances for credit losses.
Okay. Allowances for credit losses. Okay.
It's the same as the provision for bad debts, okay?
Okay.
Yes. If you have got any accrued income, you add it.
Yes. Okay. So accrued income added.
Yes.
Okay.
If you've got any prepaid expenses, you add them.
Okay.
Remember, last week I said this one is going to go to the statement of financial position. Remember, I think
Yes,
I had
sir.
approved and
Yes.
said, yes, those things will come here.
Yes.
So
I remember.
if you have those notes, I'm telling you, you'll never go wrong. So what you do is
Okay.
just have to go and check if you have them. If you don't have it, no problem.
Okay. I do have it. So
Let's
let me
see.
just. It's somewhere here.
Yeah. Debtors, do you have debtors here?
Debtors control, sir.
Yes, I think we do have. You can even check on my screen here. I have it. The last amount. Can you see it?
So the 37,596.
96.
And
Yes, I'm gonna put it in brackets here. That's the first one that I found. Okay?
Okay. Yes.
Yeah. Okay, check the formula that I just gave you there. Do you have any amount that has been paid? Yes, we do have it on 2.2. Can you see here?
Yes, sir.
But
Was
let's
that
check
the?
this data.
Yes.
160 was received,
Yes.
but they said it was recorded. So this one we
Yeah.
cannot worry about it because they
No.
said it was recorded.
Yes.
But one that was not recorded is this one. 95%. Remember this one,
95%.
written off.
Yes, sir. That was
So we do have
3,014.
written off.
Yes.
Yeah, we are going to minus it. You
Okay.
said 3,014.
40. Yes, sir.
Yes, thank you. My brother, you still remember? The other brother?
Yes.
You still remember? Perfect,
Yes.
perfect. Yes. And then the formula again. What else must we look for? Allowances.
Sir.
Yeah.
Allowances for credit losses. I don't think we have it here. We don't have.
No,
I
sir.
don't think there's
And
any.
we also we don't. Okay. In future, if we have it, and then we're gonna minus it. And then if, let's say, for example, they gave it to you, sometimes they can give you allowances here, and now they say there's a new allowance. So you only record the new allowance, okay?
Sir, 2.3.3.
Okay, so the new one.
2.3.
0.3. The unrecorded
Let's see.
commission income.
Or this is the one, this is the accrued income, né?
Yes, sir.
But no. Remember we said this one was from.
Oh, it doesn't fall in the financial year.
Was from last year. Okay.
Yes, sir.
And then let's see. No, yeah, this is from last year. So remember, unless if they made a mistake, so we'll see. Ne? Well, let's just wait. This one, let's leave it for now. Ne?
Okay.
And see, we'll see. But for me, as I said, this makes a difference because it's not from this year. I cannot edit for this year. It's not for this year.
Yes. Because it's in a different financial year or next financial year.
Yeah, different. That's true. No problem. Any prepaid expense?
No, sir.
No.
We did check
Oh, wages
2.3.2. This one, wages prepaid. Remember this?
Yes, sir.
560. Yes.
Oh,
You
yes.
must go and add 560.
Okay, let me write that down.
Yeah, write it down, brother. Plus 560.
Okay.
No problem. And then let's check another one. I think we don't. I think just found what we wanted. Other things are not there according to the notes that I gave you, okay?
Yes, sir.
Perfect. Please don't forget that. And then we just bracket it and we find the total.
Okay. Sorry, sir. I'm just calculating it now.
No, it's okay. No, it's okay. Just go.
Okay, so the new one I got was 35,160.
116 or
Yes,
60? 16,
16, like,
Like-
1/6. Yes,
like-
like that. Sir.
Okay,
Yeah.
perfect. Thank you very much. Any questions?